Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome back to the Deep Dive. Today we're going to try to peek into the future a little bit. We're taking a deep dive into the predictions for the mergers and acquisitions market in 2025. To help us figure all of this out, we've got this report by Eaton Square, a global M&A advisory firm. They call their outlook for 2025 strong enough. I don't know about you, but that title has me a little intrigued and maybe a little skeptical at the same time.
Yeah, strong enough. I mean, what does that even mean? Is it good or bad? Maybe it's like cautiously optimistic or something. Or is it hinting at some problems in the market? Guess we'll have to find out.
Exactly. That's what this deep dive is all about. One of the most interesting things I saw in the report is this whole idea of a calm before the storm. Like, on the one hand, we've got what seems like the perfect conditions for M&A right now. Financing is competitive. There's plenty of capital available. You'd think deal-making would be going crazy right now.
Yeah, you'd think so. But the M&A market doesn't always make sense, you know. What's really interesting is that even with all these good conditions, M&A activity has been kind of slow.
So why is everyone hesitating? Why aren't companies taking advantage of these perfect opportunities?
Well, Eaton Square says that private equity firms, you know, the big guys in the M&A world, they're holding on to their companies for longer than usual.
So like everyone's just sitting on their cash waiting to see what happens.
Pretty much. The average hold period, that's the time between buying and selling companies, is going up. And that's a pretty big sign that people aren't too sure about the market right now.
So it's like everyone's at this party, the music's good, there's plenty to drink, but no one's really dancing.
That's a good way to put it.
But why? What are they waiting for?
Uncertainty.
Uncertainty.
Yeah. The global economy is still pretty shaky.
True.
Inflation, you know, geopolitical stuff going on. Interest rates are all over the place.
Yeah. I see what you mean.
All this makes companies nervous about making any big moves.
Yeah.
Because who knows what things are going to look like in a year or even a few months.
So they're all dressed up with nowhere to go, ready to dance, but waiting for a song they recognize.
Exactly. And here's another interesting thing from the report. That record, $986 billion in U.S. leveraged loans in 2024. You know what most of that was for?
What?
Refinancing existing debt, not new acquisitions.
So instead of using that money to buy new companies, they're basically just restructuring their current debt, playing it safe.
Yep.
But even with all that, Eaton Square is still predicting 2025 to be strong enough. So what's going to change? Why do they think things will be so different in 2025?
Well, they're pointing to a few things. First, they think the Federal Reserve is going to keep lowering interest rates.
Okay, so cheaper borrowing. That makes sense. But is that really enough to get things moving again?
Well, there's more. They're also predicting something called tighter credit spreads.
Tighter credit spreads? What does that even mean?
Basically, it means it'll be cheaper for companies to issue new debt.
Got it. So easier to get money and cheaper to borrow it.
Right.
Okay. I'm seeing how that could lead to more M&A activity. But I still feel like there's a bump coming.
You're good at this. You're right. There is another thing that Eaton Square is banking on.
What's that?
A merger-friendly regulatory environment.
Interesting. But what does that even mean in practical terms? Are they talking about changing antitrust laws or just being more lenient on mergers?
Honestly, they don't really say. Kind of frustrating. But they definitely see whatever they think is going to happen with regulations as a big driver for M&A in 2025.
Okay, so we've got cheaper borrowing, easier access to money, and maybe a more relaxed approach to regulations. That's starting to sound pretty good. But let's not get ahead of ourselves. I think it's time to bring it back to our listeners for a second.
Definitely.
Let's translate all this Wall Street jargon into something everyone can understand. So for everyone listening, what does this all actually mean for you? Why should you care about these M&A predictions, even if you're not some big-time investor?
Well, even if you're not buying or selling companies yourself, Knowing about these trends can help you understand what's going on in the business world. Think about the industries you're interested in, or even the companies you like. All this M&A activity could completely change those industries.
Like watching a chess match. You might not be playing, but knowing the rules and how the pieces move makes it a lot more interesting to watch.
Exactly. And this isn't just some game for rich people. M&A can actually affect your everyday life. It can change the products you buy, the jobs available in your area, all sorts of stuff.
So even if you're not planning on buying or selling any companies anytime soon, keeping an eye on M&A can help you understand the world around you better.
That's right. And for anyone out there who's running their own business, knowing that 2025 could be a big year for M&A could help you make some important decisions, like how you raise money or who you partner with.
So entrepreneurs, pay attention. 2025 could be your year. But there's one thing in the Eaton Square report that I found really interesting and maybe a little worrying.
What's that?
It's all this talk about cash equity in deals. They're saying that even with all these positive signs, lenders are still really focused on deals where the buyer's putting up a lot of their own cash.
Interesting. So lenders aren't quite convinced yet, even with this strong enough market.
Yeah, it seems like they're saying, okay, we're optimistic, but we still need to see you put your money where your mouth is. It makes me wonder if there's a deeper message there. What do you think this focus on cash equity really tells us?
I think it shows that lenders are still pretty nervous. Remember all that uncertainty we were talking about? Well, it's still there. Lenders want to see companies putting their own skin in the game to show that they're serious about making the deal work.
So it's like a way of proving you really believe in the deal, not just talking a big game.
Exactly. And the report even gives us some numbers. They're saying if a company wants to borrow more than 4 times their earnings for an acquisition, they better have at least 20-25% new cash equity ready to go.
Wow, that's a lot. So it's not just about getting a good price anymore. It's about showing you're really committed.
Yeah.
Committed to the deal, to the lenders, maybe even to the whole market.
It's like a vote of confidence.
I like that.
And that confidence can make a big difference.
So are we saying that 2025 is going to be a year of cautious optimism, strong enough, but with a lot of people holding their breath?
I think that's a pretty good way to put it. It seems like we could be on the verge of a big M&A boom, but there are still some things that could hold it back.
So much to think about. Economic uncertainty, good financing conditions, maybe some changes to regulations, and lenders who are optimistic but still a little nervous. I'm starting to think we need a whole other deep dive just to process this one.
Yeah, it's complicated stuff.
That's what makes it so interesting, right?
It definitely keeps things interesting.
And speaking of interesting, we're just getting started. Stay tuned as we go even deeper into this M&A landscape. We'll be looking at how this all affects different industries, the role of technology, and of course the human stories behind all these billion-dollar deals.
It makes you wonder how this strong enough prediction is going to play out in different industries. Like, it's not going to be the same everywhere, right?
Yeah, that's a good point.
Yeah.
Some sectors are probably going to be hotter than others when it comes to M&A. What industries do you think are going to be the big targets in 2025?
Well, Eaton Square specifically mentioned technology, which isn't really a surprise.
Yeah, tech always seems to be in the middle of these big deals. Why is that? What makes tech such a prime target for M&A?
I think it's the speed of innovation. Like, think about all the changes in AI, cloud computing, cybersecurity, all that stuff.
I'm moving so fast.
Exactly. It's not just buzzwords. It's changing how we live and work.
So a company that was cutting edge a year ago could suddenly be outdated.
Yeah.
And the big companies are always looking to snap up those up-and-coming innovators.
Exactly. And it's not just about the technology itself. It's about the people who are creating it, the talent.
So it's like a reverse brain drain. And instead of losing their best people, big companies are buying them up through acquisitions.
Exactly.
Makes sense. But what about industries that aren't as, exciting as tech? What about the ones that are facing more traditional problems?
That's where things get really interesting. Take healthcare, for example. It's constantly changing. Aging population, rising costs, new regulations all the time. That's the perfect recipe for M&A.
So are we talking about big hospitals merging to get even bigger? Or is it more complicated than that?
It's not just about size. In healthcare, a lot of acquisitions are about specialization. Like, a big hospital might buy a smaller clinic that focuses on a specific type of cancer treatment or a certain surgery.
So they're filling gaps in their services
Right.
and reaching new patients.
And don't forget about the talent war we were talking about. It's really intense in healthcare. Buying a smaller practice can be a way to get a whole team of experienced doctors and nurses.
So you get the expertise and the people to actually do it. That's pretty smart. It makes you think about the bigger impact of M&A. It's not just companies buying and selling each other. It can be a way to solve bigger problems, right?
Absolutely. Sometimes M&A can be a lifeline for companies that are struggling.
You mean like companies that are falling behind technologically?
Yeah, or maybe they're not keeping up with what customers want. Instead of going bankrupt or laying off a bunch of people, they can become part of a bigger company that can turn things around.
So it's like a kind of creative destruction. It lets companies use their resources more efficiently and gives those struggling companies a second chance.
That's a good way to look at it. It's not always about one company winning and the other losing. Sometimes it's about both companies finding a way to succeed together.
A win-win.
In theory, at least.
Right, because let's be real, M&A doesn't always go smoothly. There are plenty of horror stories about deals that just completely fail, cultures clashing, integration problems, deals that end up destroying value instead of creating it.
You're not wrong. Successful M&A is about more than just finding the right target. It takes a lot of planning, careful execution. And you have to understand the human factors involved.
It's like a high-stakes surgery. You can have the best doctors and the latest technology. But if you don't treat the patient carefully, things can still go wrong.
That's a great analogy. It really highlights how important it is to consider everyone who's affected by an M&A deal. The employees, the customers, the communities where those companies operate.
You have to think about all of them.
Exactly.
And all of that gets even more complicated when you're talking about cross-border M&A, which is another trend Eaton Square talked about in their report.
Yeah. Cross-border M&A adds a whole other level of complexity. Different legal systems, different cultures, political stuff to think about.
It's like a global chess game.
It is.
And the stakes are even higher.
Definitely. That's why it's so important for companies to know exactly what they want to achieve before they start thinking about M&A. What are their goals? Are they trying to expand into new markets, acquire new technologies, or just strengthen their position in their current industry?
So you need to know your end game before you even start looking for a target.
Exactly. And once you know your goals, the next step is due diligence. And I don't just mean looking at the numbers. You need to understand the target company's culture, their leadership, how they actually operate.
It's like dating before you get married. You need to make sure you're compatible.
Exactly. Because just like a bad marriage, a bad M&A deal can be very painful for everyone.
This makes me think about the role of advisors in all this. Eaton Square, the company that wrote this report, they're an M&A advisory firm, right?
Yeah.
So they're the ones who help companies navigate this whole process.
That's right. They're like experienced guides. They help companies find potential targets, figure out the risks, negotiate the terms, and make smart decisions.
So it's like having a Sherpa guide you up Mount Everest. You wouldn't try to climb it without one.
Haha, that's a good way to put it.
And you probably shouldn't try a big acquisition without some expert help either.
Definitely not.
So we've got strategic clarity, due diligence, expert advice. Sounds like we're putting together a pretty good recipe for successful M&A.
We're getting there. But there's one more crucial ingredient we haven't talked about yet.
What's that?
The human element.
Ah, the human element. Always comes back to that, I have to admit. When I think about M&A, I usually focus on the money, the strategies, the big numbers. It's easy to forget that there are actual people involved in all this.
Yeah, it's easy to forget, but it's so important to remember. Because M&A is ultimately about people. It's about the entrepreneurs who build those companies, the employees who work there, the customers who use their products and services, their hopes and dreams and worries. All of that affects how an M&A deal turns out.
It's like we're zooming out from the spreadsheets in the boardrooms and seeing the real people behind it all.
Exactly. And when you do that, you realize that successful M&A isn't just about making money for shareholders. It's about creating a future where everyone can benefit. A stronger company, a more innovative company.
Creating a legacy, not just a transaction.
That's it.
That's a good way to put it.
And as we look ahead to 2025, it'll be interesting to see how companies handle all this. Will they focus on short-term profits? Or will they try to build something that lasts? Will they care about the people involved? Or just treat them like numbers on a spreadsheet?
Those are some big questions.
They are.
And I don't think anyone has the answers yet.
No, but asking those questions is a good start.
It shows that we're starting to understand that M&A is more than just a financial game.
It's a human endeavor with the power to change companies, industries, even whole economies.
And that brings us to a question for our listeners.
Oh, what's that?
We've talked a lot about the big picture, the trends, the predictions, but I want to bring it back to a personal level. Imagine you're the CEO of a company thinking about a big acquisition. What are the 3 most important questions you'd ask yourself before you made that decision?
That's a great question. It makes you think about more than just the money and the strategy. It makes you think about the people and the ethics involved. I'm sure everyone would have different answers. But the fact that we're even asking those questions shows how complex and important M&A is.
It reminds us that M&A is about more than just transactions. It's about transformations.
Transformations of company and
Transformations of industries.
and transformations of the people involved.
That's a powerful thought.
It is. And as we keep exploring the world of M&A, I hope our listeners will keep those questions in mind.
We've talked about a lot of different things that could shape the M&A market, but I keep thinking about that cash equity thing from the Eaton Square report. It seems like a really important sign of how careful lenders are being right now.
Yeah, it's definitely interesting, even with all these signs that the market's going to be strong enough in 2025, there's still this feeling of, I don't know, hesitation.
Hesitation, that's a good word for it.
Yeah.
Like everyone's looking ahead and seeing a good future, but they're not quite ready to jump in with both feet.
I think that hesitation's because of the economy,
Right.
all the uncertainty we talked about,
Yeah.
the global stuff, interest rates being unpredictable. Lenders and investors are definitely thinking about all that.
So even though it might be cheaper to borrow money and there's more capital available, there's still this fear of what might happen.
Exactly.
So lenders want to see buyers putting their own money on the line,
It's a way of showing that they really believe in the deal.
even when things are uncertain.
Right.
Like a test.
Yeah, like they're saying, are you willing to bet on this even if you're not 100% sure what's going to happen?
It's like a poker game. Everyone's got their chips, but the ones who are really confident are the ones pushing those chips into the middle.
I like that analogy.
And it shows how important psychology is in M&A. It's not just about numbers. It's about confidence, about showing the market that you believe in the future.
And when a buyer puts up a lot of their own cash, it's not just about protecting the lender. It's about sending a signal that they're sure about the deal.
In a world where nothing seems sure anymore,
Exactly.
and that confidence can spread, it can encourage other investors, make valuations go up,
Right.
and make the whole M&A market more active.
It's like a self-fulfilling prophecy.
If enough people believe in it, the market starts to believe in itself.
And that belief can be what pushes the market from a slow recovery to a real boom.
So many things are connected.
Yeah.
Interest rates, regulations, cash equity, they all play a part.
It's like weaving a tapestry.
And we're still weaving it. As we get closer to 2025, there are still so many questions.
Which industries will be the busiest?
Will we see more cross-border deals?
What will happen with all the geopolitical stuff going on?
It's a story that's still being written. We can analyze the trends and make predictions, but there will always be surprises.
That's what makes it so exciting.
It's like we're all characters in this big story.
And we don't know what's going to happen next.
And as we finish our deep dive into M&A, I want to ask you, the listener, a question. We've talked about the big picture,
The trends.
the predictions, but I want you to think about your own role in all of this. What will you do to shape the future of M&A?
Will you be an entrepreneur starting a new company?
Will you be an investor looking for the next big thing?
Will you be a leader making decisions about mergers and acquisitions?
There are so many possibilities.
And as you think about your own role, remember the human element we talked about?
Remember the people whose lives are affected by these deals, their dreams, their jobs, their futures.
Because M&A is about more than just money.
It's about creating something that benefits everyone.
It's about making the world a better place.
Thanks for joining us on this deep dive into the world of M&A. We'll see you next time.